Today on the Blockchain Report, Bitcoin is back over 105K, probably because peace broke out in the Middle East and markets decided to party like nothing ever happened. Meanwhile, Max Keiser is calling for 800K, claiming a Japanese bond collapse will send Bitcoin straight to the moon, or at least to the Book of Revelation. And Anthony Pompliano raised $750 million to start a Bitcoin treasury because apparently holding cash is now considered a red flag. All this and more on today's show. Let's go! Good morning, my digital desperados, freedom maxis, and everyone still trying to explain to their mom that Bitcoin isn't a video game token. I'm Hank Hudson reporting live from the crypto coast of California, where your Uber driver has a lightning node, your barista's yield farming on Arbitrum, and your landlord just turned your lease into an NFT. It's Tuesday, fam. The meme coins are manic, the macro's a mess, and somewhere, probably on a treadmill, Michael Saylor just bought another 500 Bitcoin because he saw a shadow on CNBC. Now, before we dive headfirst into the blockchain blender and YOLO our way into another week of financial chaos, punch that like button like you just saw it kick a puppy, and follow RoxomTV and me at Hank at RoxomTV on every platform where you consume content to avoid eye contact with real humans. We're on X, TikTok, YouTube, Instagram, Rumble, and even Blue Sky, because we're inclusive like that. Now, whether you're watching this from a co-working sauna full of startup bros, a subreddit arguing about ordinal theory, or your friend's garage while saying, "Trust me, bro, this cycle's different," top off your energy drink, check your seed phrase, and let's untangle the nonsense that went down while the rest of the world was doing something sane. But before we get started, let's see what the markets are trying to tell us in this morning's Market Rundown. Let's do it. All right, well, yesterday, not great. Today, better. Good tidings for all on this Tuesday. Let's see how the numbers are looking. Right now, Bitcoin having a nice surge back up to over 105,000, right around that $105,600 mark. Things are looking green and better than ever after Donald Trump claimed a ceasefire is in place between Iran and Israel. Peace in the Middle East. We're all here for it, and so is Bitcoin. Ethereum also seeing a nice bump as a result of that news, back up to nearly 2,500. We had tumbled all the way down to around 22 yesterday, but we're back up and things are looking better. XRP hanging around that $218, $219 mark. Cardano up this morning to about 58 cents a token. And Dogecoin doing a whole lot of nothing, hanging out right around that 16.5 cents mark. Let's see how the stock market is doing and if they're feeling the love from this recent ceasefire talk. Right now, we have the Dow Jones is up almost a full percentage point, almost $362 on the day. The NASDAQ is up almost 1.25%, sitting right beneath that $19,900 mark. And the S&P is also up almost a percentage point this morning. MicroStrategy, with that Bitcoin bump, it is also seeing a nice jump itself, up almost 4% this morning, right around $381 a share. Tesla is down a little bit, about $7 this morning, but it saw a big jump yesterday, so it was certainly feeling the love. I'm sure Elon's doing just fine. Coinbase having a beautiful morning, as our good friend Luca Pagano would say. They're up almost 9.5%, right around $336 a share. This has been a really nice surge for Coinbase here in the last 2 weeks or so. Nvidia also feeling the love, almost 2% up on the day. And GameStop still hovering around that $23 a share mark. We got a lot to cover on today's show, so stay put. When we're back, this morning's bull run, that and a lot more coming up. We'll see you in just a sec.
Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right. right, welcome back to this morning's Bull Run. And we have some breaking news to start the morning. This is exciting. Let's take a peek. Right now, Anthony Pompliano's ProCap BTC LLC just acquired over 3,700 Bitcoin. Now, this marks their first Bitcoin purchase after announcing a $1 billion merger and $750 million fundraise. So it looks like the Pomp is officially joining the Bitcoin Treasury arms race, and he brought his $750 million checkbook. Not bad. Now, on Monday, Pompliano said his company ProCap BTC is merging with Columbus Circle Capital Corp, ticker CCCM, to form ProCap Financial. The new firm plans to buy up to $1 billion worth of Bitcoin, and they've already gotten started because let's be real, gang, holding cash these days is for cowards. Now, they raised over $516 million by selling equity. Another $235 million came from convertible notes. That's the largest initial fundraise in history for a public Bitcoin treasury company. And the merger is expected to close by the end of this year. Now, Pompliano says that ProCap will acquire Bitcoin for our balance sheet while using risk-mitigated solutions to generate revenue from those holdings. Basically a MicroStrategy clone with a business model. And yes, it's inspired by Strategy's success. And Swan Bitcoin CIO says this is part of a sustained wave of companies turning to Bitcoin treasuries as a strategic advantage. Because in a world of depreciating fiat and corporate clownery, stacking sats is starting to look like the adult decision. Now for Bitcoin, another $1 billion potentially leaving the open market, which means supply goes down, conviction goes up, and the price, well, you can guess where that's going next. We're at 105K right now. In other news, Bitcoin bounced back to that 106 mark yesterday. Again, we're back to around 105.5 today because apparently all it takes to erase a $7,500 drop is a ceasefire announcement and some rate cut speculation. After dipping below 98,500 for the first time in nearly 45 days, Bitcoin decided that it didn't like being priced in the five-figure club anymore and launched itself back up into institutional investor territory. The catalyst of all this, well, none other than current former president and game show host Donald Trump, as he announced a total ceasefire between Israel and Iran. This is the kind of ceasefire that makes traders breathe again and reopen their long positions, as we've seen in today's charts. Now, the markets are wondering if Bitcoin can break through that 110K level or if we're due for yet another round of geopolitical surprise candles. Now, despite all the chaos, Bitcoin's derivatives markets didn't even blink. The move did trigger $193 million in liquidations for overzealous leveraged bulls. That's 0.3% of total futures open interest, in case you were feeling bad. And the $68 billion still parked in leveraged positions? Exactly the same as it was Saturday, because nothing builds conviction quite like getting liquidated and saying, double or nothing. Now, the price dropped 4.4% in just 12 hours over the weekend, but that's barely a scratch in Bitcoin terms. Similar drawdowns have happened 3 times in just the last 30 days. Still, some traders are worried a prolonged conflict in Iran could make everyone risk-averse yet again, which is code for we'll pretend to care for a few hours and then buy the dip anyway. Meanwhile, Bitcoin's hash rate took an 8% hit between Sunday and Thursday, falling from 943.6 million terahash to 865 million. Naturally, that sparked a wave of speculation about whether the Middle East conflict is messing with mining operations. Now, some analysts have claimed, with little proof, mind you, that Iran has about 2 gigawatts of unauthorized mining capacity. But there's no transparent data to all this, so it's basically Schrodinger's mining farm. That said, sharp hash rate drops aren't exactly uncommon. Daniel Batten pointed out that they often happen, that rhymed, when U.S. miners shut down due to weather. Like on April 22nd, for instance, when tornadoes, hail, and heavy rain in Texas and Oklahoma caused a 27% plunge in hash rate. So yeah, it's not always war. Sometimes it's wind. And on the macro side of things, oil prices dropped Monday after spiking to $77 on Sunday. The S&P 500 gained a percentage point, and traders now think the Fed is going to cut rates sooner than originally anticipated. According to the CME FedWatch tool, the chance of the Fed holding steady through November fell to 8.4%, which is down 17.1% from only a week ago. Meanwhile, the odds of rates dropping to 3.75% or lower jumped to 53%, which is up from 38%. So basically, war off, oil down, stocks up, and rates probably headed due south. But should you bet on Bitcoin hitting 110K because of this ceasefire? Probably not. But the fact that it bounced back above 100K this fast, that's a flashing neon sign that institutional interest in Bitcoin is alive and well and happily ignoring the global chaos. There's the sign. And as for Bitcoin, well, it's another reminder that when the world's on fire, the money runs to hard assets, preferably the decentralized, censorship-resistant kind, if you know what I mean. And Metaplanet, well, they're back in the news because they bought another 1,000 Bitcoin, because if you're going to ape in, you might as well do it with numerology. That brings their total stash to over 11,000 BTC, which is either a bullish signal or someone in accounting really loves repeating digits. I believe the number is currently 11,111 or something. It's a lot of ones. Now, naturally, this summoned MicroStrategy from his Citadel, who tweeted, "How many companies have a path to Bitcoin sovereign?" There he is. Hey, Michael, good to see ya. And just like that, we have a new phrase to put on t-shirts, mugs, and the inevitable laser-eyed leadership book coming to a store near you. Now, this wasn't some casual buy the dip either, okay? Metaplanet's got a plan, and there's the book, and their plan is 30,000 Bitcoin by this year's end, 100,000 in 2026, and 210,000 in 2027, which is also the number of times they'll probably mention digital gold during investor calls. Now, their current holdings worth about $1.13 billion with a comfy 7.8% unrealized gain, and Bitcoin now makes up 15% of their market cap, which is adorable next to Saylor, who wakes up and eats that for breakfast. Speaking of which, Strategy, the artist formerly known as MicroStrategy, now holds over 592,000 Bitcoin. That's about $60 billion of orange coin on the books currently. And if we can go to what, again, is one of my favorite websites in the world, let's check it out, bitcointreasuries.net. We can actually take a look at the numbers here really quick. Can we bring that up, guys? There it is. Thank you. All right, so if we go through Bitcoin treasuries here, you can see at the top we have MicroStrategy. They are still firmly in the number one spot. And if we click on MicroStrategy, okay, we can actually take a look at their numbers specifically in regards to Bitcoin, right? So right now they actually have 592,345. So they picked up a measly 245 additional Bitcoin just a day or two ago to bring their total Bitcoin to that right there. Right now, their average cost per BTC is about $70,681, which puts them at an unrealized profit loss of almost 50%, which means I think they're doing pretty good. And if you scroll down a little further, we can see their stock and financials and how that relates to Bitcoin as well. So this is super helpful, as their current share price is right around that $379 a share piece, market cap around $106 billion. So, and that market cap is made up of 59% worth of their Bitcoin holdings. So they're really all in on that, as we know. Our Lord and Sailor, when he goes in hard, baby. So bitcointreasuries.net, number one place on the website to check out all of the latest public holdings and their Bitcoin treasury. So be sure to take a peek at that. So if Bitcoin ever goes to zero, mind you, Strategy will become a strictly vibes-based business model, but right now they're doing okay. Meanwhile, Bitcoin has been chilling above 100K despite that weekend wobble that we talked about earlier, and Metaplanet stock is trading at 6x its net asset value, which either means that markets are very bullish or no one's reading the footnotes to anything. Now, but the real story here isn't actually the numbers, okay? It's the power play. Now, Saylor, he's not just stacking sats, he is calling his shot and asking for the rest of corporate Earth, are you here to speculate or are you here to rule? Because in his world, Bitcoin isn't just sound money, it's a throne. And he's already picked out his crown. It's Bitcoin, just a reminder. And in other news, Trump Media and Technology Group, ticker symbol DJT, because subtlety is also for cowards, says it's planning to buy back up to $400 million of its own stock. Now that includes shares, warrants, and potentially even some kind of convertible notes, because when your stock's down 30% in a month, the obvious solution is to buy the dip of yourself. Now, Devin Nunes, who you might remember from his congressional I read the memo era, is now the CEO and chairman of Trump Media, and he says this move is a vote of confidence in our company, our stock, and our strategic plans. Or in other words, we've got $3 billion in the bank and absolutely no interest in sitting still. Also, please, investors, stop panicking. Don't want that. According to Trump Media, the repurchase program will be discretionary, meaning they'll buy their own stock when they feel like it, how they feel like it, and possibly in a boardroom full of cigars and red hats. But here's the kicker, okay? This move won't mess with their Bitcoin strategy. That's $2.3 billion private placement that they raised from 50 institutional investors, still locked and loaded for BTC, baby. Now, earlier this month, the SEC gave Trump Media the all clear to start buying Bitcoin using those funds, so the DJT Bitcoin treasury dream is still very much alive and well. And if you think this is the Trump family's only crypto venture, then you are adorable, sir, as Don Jr. and Eric are also out here mining Bitcoin and, of course, calling it American mining, like it's a freedom-branded ASIC farm. And then there's World Liberty Financial, a yet-to-launch DeFi project that reportedly has significant exposure to altcoins, which sounds like the Web3 version of naming a yacht before you actually build it. Now, Trump Media also owns Truth Social, the platform where Caps Locks goes to retire. And they also launched Truth Plus streaming. And it is, as of January, a fintech startup called Truth.fi, because apparently everything now comes with a suffix and a white paper. But despite all the bravado and Bitcoin plans, DJT shares are down roughly 30% since they announced the treasury strategy. So what's the bottom line here? Well, even if the stock's flopping harder than a Truth Social IPO, the Bitcoin plan is still full steam ahead. At any time $2.3 billion gets funneled into Bitcoin, regardless of the brand attached, it adds serious fuel to the fire. We're talking more exposure, more legitimacy, more reasons why Bitcoin keeps climbing, even if the ride comes with a few red hats along the way. And it turns out that Bitcoin's biggest threat isn't regulation, China, or a bored Elon Musk. It's the end of the Trump administration? Okay. I mean, that at least is the claim surfacing in hedge fund circles, according to Eric Semler, chairman of Semler Scientific and the founder of TCS Capital. Semler says many of his traditional finance peers still treat Bitcoin like a fly-by-night gimmick propped up by Trump's current pro-crypto stance. Now, once 45 exits stage right, they expect the magic internet money to vanish with them. But Semler, he's doubling down, literally. In fact, his company, Semler Scientific, just announced plans to grow its Bitcoin holdings from nearly 4,400 BTC to 105,000 over the next 2.5 years. That's not a treasury strategy, my friends. That is a full-blown personality trait. The guy clearly thrives on being a contrarian. I love the negativity, he said. I'm a lone voice cry in the wilderness. Poetic. And which, to be fair, is exactly how you sound when you announce you're YOLOing into 100K Bitcoin in front of a room full of guys still trading bonds like it's 1997. And yet, the broader trend says Semler might not be alone for very long. Crypto exposure among hedge funds has quietly jumped from 29% in 2023 to 47% in 2024, according to the AIMA and PwC. And a 2021 Intertrust survey showed that 98% of hedge fund CFOs expected to allocate 7.2% of assets to crypto by 2026. So while the TradFi crowd may talk like they're skeptical, their wallets are starting to say otherwise. Now, if Semler's right, the real post-Trump fear isn't that Bitcoin fades, it's that the contrarians cash in and the herd shows up late. All right, we're going to take a quick break. We're taking a quick break. I need a breather and some coffee. But when we're back, Max Keiser says Bitcoin's going to 800K? Sounds like a lot. You'll want to know why, and you'll learn about it right after this. All right, welcome back to this morning's bull run. Now, after Bitcoin dipped under 100K this past weekend, Max Keiser says he's not seeing a dip. He is seeing a biblical prophecy. What does that mean? Well, in an interview with Bitcoin Magazine, Keiser said, "We are one Japanese bond away from Bitcoin launching to 800K. Let's take a look and see what he has to say in the video.
Looking at the global financial picture and how Bitcoin gets to 800,000 and above, there is one piece of data that is at the linchpin of the entire global financial system. It's the rate of interest on the 10-year Japanese bond. So the 10-year treasury in Japan has never been higher. It's like 3.5%. And it's at a precipice now where if it gets much higher, the Japanese economy is going to have to start selling U.S. Treasury bonds to stay solvent, which would create a cascading event, what I call the bond apocalypse, where the global bond market crashes.
All right, so in the video there, in Keiser's scenario, he says that trillions will flee the collapsing bond market and sprint their way into BTC. And boom, Bitcoin then rockets past 500K, blows through 600K, and lands at around 800,000, all while Max Keiser cackles like a Bond villain made of orange-pilling memes. Meanwhile, back on Earth, not everyone's on board with the whole apocalypse train. A trader named Mr. Wall Street, subtle branding there, says that charts are screaming for lower and predicts a short-term drop to 95K, which is a slightly more grounded take than Japanese bonds are gonna make us all rich, but I like that take better. Though with that being said, not everyone's in doom mode. Some are pointing out that long liquidations are spiking without a full-on price collapse. And then, of course, there's DeFi Tracer, who says we might be moving from uncertainty into the trust phase, because apparently market cycles are now relationship therapy. And in other news, Sequins Communications, a semiconductor firm based in Paris, is now officially on the leveraged Bitcoin treasury bandwagon, because nothing says 5G IoT connectivity like aping into crypto with nearly $400 million. The company plans to raise about $385 million via private placements, and that includes $195 million in equity and $189 million in convertible bonds. So yeah, they are literally printing stock and debt to buy Bitcoin. Now, Sequins CEO Georges Karam said the move shows their strong conviction in Bitcoin as a premier asset and compelling long-term investment. Or in other words, why hold euros when you can hold digital fire? Sequins joins a growing list of publicly traded companies raising money to build a Bitcoin treasury. This is basically the strategy, formerly MicroStrategy playbook, but in Francais. Now, it's the same leveraged crypto YOLO move, just with, more baguettes. Swan Bitcoin is advising them on the deal. And placement agents include Northland Capital Markets, B. Riley Securities, and Yorkville Securities. The whole thing is expected to close by July 1st. Founded in 2003, Sequins specializes in wireless tech and 5G solutions. Their current market cap, though, a modest $40 million. Their share price dropped 12% to $1.62 on Monday after the announcement, which is what happens when a company says, forget the product, we're buying Bitcoin now. So what's the whole takeaway here? Well, yet another company is trading future debt for Bitcoin exposure. And as more firms do this, it reduces available supply and makes Bitcoin even more valuable to those who don't need to sell stock to afford it. All right, so we're going to take a quick break, but we're doing the next story. I'm totally wrong. It's a live show. So in other news, Bitcoin dominance has surged to a new cycle high above 66%, which is great news for Bitcoin and catastrophic news for every token named after a dog, a fruit, or an adjective. Analyst FinCens posted on X that Bitcoin dominance feels like it can never go down again, which is the technical analysis equivalent of manifesting. Still, he thinks we're due for a correction sometime soon. He pegs the potential top around 68.56%, which is impressively specific for a market driven by vibes and laser eyes. Now after that, he thinks Bitcoin dominance could plummet all the way down to 48%, which would mean cue altcoin season, baby. Yeah, that magical time of year when coins with no revenue, no users, and no devs suddenly go up 900% because someone on X said it's time. Now, Michael Van Pop also chimed in to say that the altcoin season indicator just hit a 2-year low. He noticed the same thing happened in June or July during the last 6 years, which could mean we're following some kind of lunar altcoin solstice pattern. He didn't give a hard prediction on when altcoin season will begin, or if it even will for that matter, but he did say that the last time this happened, people were calling it a Bitcoin cycle right before altcoin's moon ran into oblivion. Now, Van de Pop also said altcoins need a push from Ethereum, which will only happen if Bitcoin decides to stop hogging the spotlight. Apparently, if Bitcoin bottoms out, Ethereum might finally start outperforming again. And when that happens, altcoins might shine, which is a polite way of saying temporarily distract you from Bitcoin's long-term dominance. As of now, Bitcoin is trading around that 105K, 106K mark, which was down in the past 48 hours, but back up again in the last 24. So what does this actually mean for the market going forward? Well, right now, the market is still very much all in on Bitcoin. Altcoins can sit quietly and wait for their turn like middle children at the Thanksgiving table. And as long as Bitcoin dominance stays this high, well, that's great news for Bitcoin's price stability, its narrative dominance, and its staying power as the only crypto asset that doesn't rely on your vibes to stay relevant. All right, so we're taking a break? We're taking a break. Okay, when we're back, we have an exclusive interview with the man that knows it all. We're talking about Stephen Big Beat Orr coming up right after this. All right, on today's deep dive, our guest isn't just another guy with a pitch deck and a ChatGPT subscription. He is a 30-year market veteran, a Wall Street heavyweight, and the kind of trader who was stacking wins in equities, futures, and options before most of us knew what a ticker symbol was. He's the founder and CEO of Keiser Markets, a fintech platform that's not just aiming to disrupt the trading world, it's rebuilding it from the ground up with AI, real-time insights, and more data feeds than your brain has tabs open. He also serves on the board of the American Blockchain and Cryptocurrency Association, which means when crypto policy hits DC, he's not watching from the sidelines, he's in the room. And if that weren't enough, he's been a public servant, a strategist, a startup builder, and apparently one of the few people on earth who actually thrives at the intersection of finance, tech, and global chaos. Please give a big blockchain report welcome to the show to the one and only Stephen Big Beat Orr. Stephen, welcome to the Blockchain Report. It is so great having you on the show today. How are you doing this Tuesday?
I'm good, Hank. I mean, that might have been one of the best intros I think I've ever gotten. And I almost forgot who that guy was that you were interviewing. So I love this.
Well, I'm glad you enjoyed it. You are a man worthy of the praise, for sure.
Thank you, yes. You know, it's interesting, Hank. You know, I've had a very good 34-year run here, and I've been at the intersection, as you said, of policy, White House, State Department, pro sports, technology, and it always seems that fintech is always the world that's always the last one to be upgraded, right? And it's cool to be living in an era now that this is the beginning of the first people that are actually upgrading their fintech. And what the heck is going on, especially in the blockchain and digital assets space? So here we are at the beginning of all this, and look, we're only in inning one. I think everybody goes, oh, well, blockchain and crypto's been around for 50 years. It actually has. Digital assets and how that we look at the AI, artificial intelligence, that word was not coined 10 years ago, it was coined 50 years ago, right? But look at how fast the markets have moved so much. And my goodness, you put the word AI in your IPO and in your name, boom, the stock explodes, right? But we are literally living in a time and era where I think that there's never been a time where anybody and everybody can actually start to create what they want. And there's always been a problem in the fintech space is that they didn't have money, or they didn't have an ability, or they didn't have a developer. And all of that can happen now when we built all of that at Quasar Market. So thanks for having me.
Oh, we are so excited to have you and learn more about you and Quasar Markets. I mean, you and I had a great chance to connect over at the Bitcoin conference just a few weeks ago in Vegas. I got to ask, as a veteran of the space, how do you think it stacked up to conferences of yesteryear?
100% the best conference. So, and you know, obviously they upped it again for another year. Miami, obviously, and Nashville in the past were fun. But when it came to the next level, I saw the next level there. Robotics was mentioned many times there. You saw the, you know, not just one or two Bitcoin miners, but the energy behind it was there. The companies that were now supporting it. In the past, I'm not so sure. There was some issues, you know, with regulatory concerns. Gone, gone, gone. You even had the vice president of the United States, a highly elected official, not just someone running for president, which is great last year in Nashville, but this year you actually had an elected official coming and talking about it in the executive branch. That has never happened, and I thought that was very cool. And I liked what he had to say. It's not an issue about Republican or Democrat or whatever party you're part of. It was an everybody issue. I really enjoyed JD Vance's speech.
Oh, absolutely. I mean, like you said, a lot of standout moments. From your time there, were there any specific panels, projects, speakers, maybe one of those AI humanoid robots that particularly surprised you? Or did everything you see at the conference kind of go in line with what you envisioned heading in?
Oh, I saw two things I really enjoyed. One was meeting Aria and Melody, the robots from realrobotics.com. I really enjoyed that a lot. I got to meet the CEO and owner there. Had a long chat with him. Actually, I had him on my show too as well. And I think the other thing that I really liked, look, I love hearing Michael Saylor, rah, 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 and I like all of those big speeches. But what I really wanted to hear was next level stuff. What are we working on? What is the future look like? I already know what the past looked like, but I thought that one of the cool things that was there was the acceptance of crypto in general. And for the first time, I mean, I couldn't believe it, but Peter Schiff was there at the conference and talking about, wow, you know, like Peter, you know, hey, Peter, look around, look how many people are here, right? You know, he believes in his gold. I understand that, and gold's high, but he said something very interesting to me. He's like, look, Steve, look around you. You know, like you have a president that loves it. You've got a whole Congress that loves crypto. They're all about it. And so you're on a high, and this is the high of the markets. And I'm like, well, I don't think so, right? Look around. Look at the acceptance. In the past, it was the fringes of society. Today, it's being accepted by JP Morgan, Goldman Sachs, you name a firm. Everybody's accepting crypto. That has never happened. And listen, I bought my first Bitcoin at 75 bucks. Even I was skeptical then. And today, you know, oh, you should sell at 200, Steve. You did good. Hey, Steve, you should sell at 5,000. You did good. Oh, Steve, you're at 19,000, right? Oh my God, 100,000, 110,000. Here we go. We're not done yet. You know, it's interesting. Out of the 21 million just in Bitcoin alone, 18.5 million, 19 million is already mined. It's not much left, right? And I keep hearing, oh, well, quantum computing is going to break the encryptions. Come on, I've heard every reason in the world why Bitcoin and crypto are going to die, and yet the adoption is even at the fastest pace ever. So put all that poo-poo to nonsense and just keep buying. I love it. Every dip I buy.
Absolutely. And with all of this regulatory red tape starting to clear from, the government finally putting some guardrails in place, I would only expect that type of momentum going further. And like Michael Saylor says, every Bitcoin you didn't buy is like $13 million you'll be missing out on in the future, right? And I love to hear that from someone like you, such a seasoned trader. I mean, since the early 90s. And I got to ask, what originally drew you into the markets even as a young man? I think I read you got your first dividend check when you were 16 from Disney. Was that your moment that you knew this was a game you wanted to be in long term?
That's true, and thanks for asking. Yes, I was so young back then. My mom had to be my custodian, and today I even still have that check framed in my office, and it was 91 cents, right? I was so proud of that because, look, it wasn't just about buying and selling something. In that case, I believed in Disney as a young kid, but I kept the stock, and look, I believed in investing. It's not just about, ripping off a win here and there, and that's how you trade. I wanted to learn how to make money longer term. When kids wanted to be astronauts and firefighters, I wanted to be a stockbroker. So I had to like literally drive at 16, 17, 18. I wanted to learn. I learned from one of the best commodities traders in the area from where I'm from. And I did that. He was Green Beret. And look, he's like, Steve, you want to learn, you got to do it the right way. So I'm going to sit there and teach you. And he handed me graph paper and pad and a pen and said, we're going to teach you graphing. This is before computers really even use it today, right? So I have been involved for all the way from technical analysis from the very get-go. I've enjoyed the fact that I'm friends with the godfather of technical analysis, Ralph Acapura, and his nephew, Jay Woods, in Wall Street. And I love that section. Now, I ended up going to work for a guy named Bill Clinton in the White House and State Department. I took a turn, but I'd always been a trader, right? I traded silver for many, many years. Right now, the trader, the runner for literally for the Hunt brothers back in the 70s, Peter Thomas, is actually on my team. I learned how to trade at a very young age, all the way through. And look, trading is not about a 1 or 2 year process. Oh, I'm going to learn technical analysis, and it's got to learn everything. You got to learn, why someone in Japan affects the markets in the United States. Why does a technical indicator here work today but not tomorrow? You have to understand all aspects of it. And of course, for me, I believe in not just technical analysis or fundamental analysis, but I also believe in theses. You have to understand what it is that you're buying, why you're buying it. And what I always say, it's the mispricing of pricing. When you look at the markets, there's a reason why we buy or short or sell or whatever you're doing, because you don't think the price of that commodity, that stock, that currency, Forex, or in that crypto, you don't think it's right. You either think it's the wrong price, and in this case, he thinks we're going to 13 million, or in my case, sometimes I have to short a stock because I think the price is too high. That you have to understand why you're doing it. And I think one of the problems right now that we're seeing in the markets is these 50 to 100x, and we're gonna make $1 billion on every crypto. That's not true. I look at it from the back end, and I love the blockchain report because, quite frankly, you're digging into why a crypto is a crypto. What does it do? My friend Howard Greenberg, president of ABCA, says all the time, look, what does it do? Show me the white paper. Show me what it is that they're going to do as a company. What are they going to solve? And I think blockchain is the answer to a lot of the problems. I want to know where our food comes from. So blockchain the food lines. Blockchain, I want to know where the part comes from. If something breaks down, there's a whole bunch of breakdowns in the cars, like the automobiles. And if a tire is bad, I know exactly where that came from because I read it on the blockchain. Or in our case, in the securities industry, right? I want to know how that person through compliance came up with that idea. So let's blockchain the idea and how they come up with it. There's a billion ways for blockchain. And I really, really am glad that there's a place now that people can get the real answers on what's really going on there at the blockchain report.
That's right, baby. And Stephen, what I really love about you and your background and what you're doing is you've had a really storied career from the Department of State to Benzinga to now a fintech entrepreneur. And it seems like you're taking all of that knowledge that you've collected over the years and that wisdom and putting it together in the form of Quasar Markets. So for our audience at home, can you explain it to us in like one sentence? You've kind of described it as like the Amazon of finance in the marketplace for everything. What does that mean?
Yeah, the problem in fintech is one big problem. It's very fragmented. Everybody is trying to solve some problem in that market. And the other problem that we're really seeing is that not every product is good, right? And I want to put a place together that puts all of the good products, all the good companies, all of the good TV shows like this one, putting all the good educators together, all of the right pieces in one place, so that if the user is a fan of E-Trade or Robinhood or Binance or their Fidelity, I don't care, right? Let them trade the way they want to. Right now, if you know me, I got 25 screens around me. I want to be able to see it in any language. I want to know what the people around the world are looking at. I want to know how I can become a better trader with better data. And not only that, but I've been talking about AI for over 15 years. I speak at WEF and I speak at United Nations and several places around the world and about AI. And I want to take that, and the problem with AI becomes, well, it hallucinates. And it's getting worse and worse and worse. The problem is not letting ChatGPT just go willy-nilly try to answer your question, but I want to know it from the actual databases. So what if I could take the GPTs of the world and all of them, not just one or two, we have about over 18 in our system, and it's being patented, what if if I could attach them to the actual database like Fred and Edgar and blockchain reports and things of that nature and get a better data, a better answer, and then give the user a better question to ask to get a better answer on things they didn't even know to even ask. That's what I wanted to do because, quite frankly, that is lacking in this world of fintech.
Yeah, and in this world today, I think a challenge that we face is we have such a quantity of information available out there, right? But with all of this quantity, sometimes can cause a lack of clarity. I mean, Quasar uses I think it's over 15,000 data sources. So I have to ask, like, how do you ensure that that volume turns into clarity rather than noise for your users?
Yeah, that's right. You know what? I believe in the collective community, right? That we're together, we're better than we are apart. And what if I can take all the questions and answers from everyone asking the same question, same answers, and get better answers and better questions? What I always say is if you just let ChatGPT and you ask it a question about what happened in the news today, you're going to get 30 different answers from 30,000 different people. You're not going to get the same one, right? What if I could get the actual answer for the actual question you're looking for? We used to feel that way with Google, but that's kind of gone by the wayside, right? I don't even use Google search anymore, right? But also the problem is that you can't just use one AI. So like, for example, Anthropic is great for narrative. So if I don't understand what's going on in the market, I want the machine to explain it in a much better way for me as it knows me. So agentic AI is the way that I'm looking to go, right? Meaning that it becomes part of me. It understands me. I love options. I've been trading options for, 34 years. I want to learn from people like Scott Bauer of options, OIC, Option Industry Council, Prosper Trading, all those guys that actually wrote the book on options, right? I want to learn from that, but how do I do that without talking to Scott every day? Now, Scott's a dear friend and he's on my board, but the average person can't do that. So what if I can bring those people, those databases, and set them inside the platform and then let the AIs pull from that? A good example not too long ago was I was sawing weather patterns and not just having stock and fundamentals and options and crypto, but the whole world matters. And so if a big storm comes through like it did in the Ivory Coast, off the west coast of the Ivory Coast, came barreling into it, El Nino, that's a weather pattern, right? I also want to know about sports and other things, other data points. But as that came across, I also noticed there were geopolitical issues on the east side of the Ivory Coast, and guess what? Coffee prices, cocoa prices went through the roof, and we knew that not a day or the day of, because we're living day by day by the news. What if I knew that weeks ahead of time? What if I knew that literally 2 weeks ahead of time, and I did do that? And what if I knew the weather patterns were going to change and go the other way and be good, and the price come back down? And it did. So if 9,000 over 15,000 back to 8,000. Literally less than 3 weeks. And I knew that data long before anybody else did. Another good example of that would be weight loss drugs. How is that going to affect the rest of the world? Well, it's very simple to me. As a thesis trader, I know it's going to hurt the McDonald's of the world. I'm currently short McDonald's for a very good reason. But McDonald's wasn't coming down. Eventually it came down because weight loss drugs affected the patterns of people. And I knew that through the AI.
That's incredible. I mean, and you guys are doing amazing. I believe you won FinTech Startup of the Year and the Artificial Intelligence Startup of the Year. What do you attribute to that success? It sounds like your platform's ability to go really granular with different information out there, and then how that affects the world kind of gives it a unique edge and advantage amidst all the competition out there. Is that part of what you attribute to Quasar's success so far, or are there other things involved as well that are behind the scenes that I don't know about?
I appreciate that. We won 4 awards to international as well about it. Why? Because quite frankly, as my wife says, look, Steve, you already know all of these things because you've already done these things, right? I know where the pitfalls are. I know the people and the players of the game. I know the New York Stock Exchange very well. I know everybody there. I know everybody, and I'm just up there, and I know everybody at NASDAQ. Great 2 organizations. If you don't know, look, it's not about us versus them in this world, right? It's not, DeFi versus TradeFi versus Unify versus whatever Fi. It's about coming together. I mean, that's what I said earlier. JD Vance said it best, right? We all should come together and make a better world. And that's what I wanted to do. I wanted to put all of us together because, look, the world is not made of Bernie money made of all over the place, right? 90% of this world is actually good people. But what happens is we end up listening to people that have the loudest voice, or they have a different personality, an Elon Musk or whatever. We listen to them a lot because they're the ones that have the social media. But there are a lot of very good quality people that need to be heard, and places just like this that are raising their voices to another level. This is exactly what needed to happen. And so I also want to put the right people with the right types of data, with the right types of understanding, and do it in a way that's forward thinking, meaning that in the future, we're not going to be having our heads plastered to a cell phone, to a smartphone. It's going to be in a wearable, your glasses, your Oculus, your Apple Vision Pro. It's going to be on your watch. We're already doing that. But, but when my dad and mom were coming up in the 60s, they had Dick Tracy with their watch, and they looked down, they could talk to somebody else. That's not science fiction anymore. That's reality, right? And we look in the future, and I tell people, well, in the future, you won't be driving your car. The car will drive yourself. I said that 15 years ago. People thought I was crazy. Today, I'm telling you, you probably won't even have a driver. You'll be turned inward, and you'll be playing chess and all kinds of games in your car where you won't even be driving it. They're like, well, how do you push the gas pedal? There won't be gas and there won't be a pedal, right? A lot of times when you look at fintech in the world of technology, it's about the visionaries that see the world a little bit different and how it should be. When I talk about the Jeff Bezos and how he was building Amazon at the very beginning, his greatest idea was putting books, physical books, on the internet. Well, today, that's less than 1% of his sales, right? Because now most of his book sales, which is 4% of his company, is literally on the Kindles and in the machines that he sold, right? But it's selling everything. I mean, literally, not only his own hammer, but everybody else's hammer. And then he supported it with AWS and with a whole team around that. Well, what if I could replicate that to everybody, having the best software out there, the best people, the best educators, the best everything? So that's what I wanted to do, and we did that.
Yeah, and as someone who kind of sees these dominoes fall seemingly before they actually do, you're talking about making your platform available to people wearing headsets and the like. What is the future of fintech, do you think, going to look like? Is it going to be a voice activated experience are we going to be in the metaverse and we're all wearing our Apple or Google glasses? Like, what does that look like to you?
Yeah, 100%. I mean, I think one of the things I constantly hear is, hey, I wish I could see the old days when you're back on the floor and all those kind of fun pits. What if we could build that in metaverse? What if we could do all the things that make us human? One of the things that I continue to hear, and there's a big Harvard study on it, that companionship was a big problem, right? That the social aspect of who we are is changing. And I don't like the fact that I go to dinner and everybody's got their cell phones out, look at their cell phones and not having conversations again, right? I want to be able to make that where it's conversation, where people understand each other and get back to the business. I want to be able to walk down the street and not have to, you heard something. You walk down the street and you see Nike shoes that you really want. Well, okay, in your Oculus or your whatever your wearable is, you get the ad, but it goes away, and it's more like subliminal than anything else. And I want to make a trade. I want to buy Nike stock because I see that new shoe out, but I didn't have to go through my phone, have to go ask all the questions of the AI as we do today. Tomorrow, in the future, that I see is a way that we're all more of a conglomerate, that we all think a little bit more closer because we're not being I want to know what's going on in Japan. I want to know what's going on in Germany. How is that affecting my stock before it happens, right? And so in order to do that, we've got to make the world just a little bit closer and not farther apart.
Yeah, no, I totally agree. And I think with Quasar, you're really able to do that. You're able, it sounds like, to aggregate all this information to paint a more 360 picture for investors, which I know we got to let you go soon, but that brings me to a very important question. I'm sure a lot of our audience is wondering themselves right now. Would you say Quasar is for more of the casual investors or the serious traders? And do you see those categories kind of blending together a little bit more or differently in the future?
Nope, I built this machine that it doesn't matter if you are a retail trader or institutional. We have both. We have institutional data on the system, and we also have retail. We also made it in a way that was very cheap. We made it $15 a month to get on. It's a free sign up. Go sign up, go check it out, go play with it. For $15 a month, you get real time data. That's better than spending $250 or $200 At this point, I think it's 2,500 a month now for a Bloomberg machine, 150 now for Benzinga. It's outrageous. There's no reason for it. Why? Because we did exactly what I asked it to do, which was to lower the number of people being employed, put all the data that you can into it, and create a machine that understands you, agentic AI that becomes part of who you are. I do believe in the future that developers will be a thing of the past. I think code is already writing code and it's already fixing code. What if we could have a machine that actually writes code for you so that you can take that code and create algos and take that code and be able to put it into your trading view charts? We did that too. So all of those fun things that people are thinking about, I'm already building and I have already built. And we did it in every language on the planet already.
That is incredible, Steven. And before we let you go, I know for a fact our audience is like, listen, we need to up our trading game. How do we get involved in Quasar Markets? If they've got questions, it sounds like you've got the answers. Where can I send them?
QuasarMarkets.com. Look, it's very simple, and I've had the same cell phone I've had since I left the White House, and I'll tell you, I always answer my emails. So it's Steven, Steven, at QuasarMarkets.com. I will answer your questions. I have for many, many years. And look, it's not, and I think some people think I'm a robot. I am not. I'm a real person. I promise you. Look, I think in the future when we are digesting data and understanding the news as it comes in, there won't be a presenter talking to you, right? You'll have the presenter that you want. I want somebody who has this accent and this look and feel, and you'll be able to personalize that to yourself. And I think that's what's going to change it so that we can actually have these kind of conversations with you, Hank, at Rock. I love this, man. I love this show, and I love what you guys are doing. RoxomTV is awesome. You asked me earlier, like, what surprised me the most? I think Roxom did, because I think it's such a great idea.
Oh, we certainly appreciate the kind words, Steven. And I got to tell you, you are always a blast to chat with, and we certainly appreciate you and your time for being on the show today and for helping level the playing field amidst, traders everywhere. Finally, the rest of us can get that info that only the big boys have been able to access for so long. So we certainly appreciate you and all your efforts. And thank you for coming on, Steven. We can't wait to have you again sometime on the show. You are welcome anytime here on the Blockchain Report, and I hope you have an amazing rest of the week, my friend.
Thanks, Hank.
So today's guest is not your average compliance officer. He's the chief compliance and legal officer at Roxom, but before that, he spent over a decade in Argentina's criminal justice system, advised international governments on crime prevention, and built compliance programs that actually work in the real world. He's helped crypto companies scale from 30,000 to over 2 million users, all the while navigating the minefield of global regulations, licensing, and risk across Latin America, Europe, and beyond. He's a lawyer, a professor, a crypto compliance wizard, and probably the only guy that can quote an FATF rules and explain blockchain analytics in the same breath. Please give a big Blockchain Report welcome to Alfonso Martínez Seward. Alfonso, welcome to the show. They are excited to have you here, and so am I. How are you on this fine Tuesday?
Fine, Hank. I'm super excited about being here and hearing that amazing intro that seemed like a lot.
Well, you are deserving of the intro for sure, and I want to introduce everyone who may not know about you yet, Alfonso. So we want to get started here. How did you begin in law, and how did that lead you to your work in crypto today?
Okay, how I begin in law. I always wanted to work with criminal related topics. I think I played like too many video games when I was young. So something that actually made a lot of sense was studying law and entering in working in the criminal system. When I was 19, I entered in the criminal justice in Argentina, where I stayed for 13 years, like going around on all types of functions. And on 2021, I decided to leave my prior career and jump to crypto, knowing that crypto was the future. And if my passion is crime, law enforcement, and crime combat, etc., things were going to happen in blockchain. So it actually made a lot of sense to go to crypto. So then in 2021, I made this big change, and I entered a really small company in that moment with 20,000 users to make the risk and compliance program from scratch. And I left 3 years later with 2.5 million users, operating in 8 countries, having seen lots of things, having participated in a lot of cases with law enforcement. So a nice experience.
Well, I appreciate you giving us that background, Alfonso. And I want to get to the meat and potatoes right now, because there is a lot happening in the world. Specifically, we're talking about the Middle East. And I know you are very knowledgeable on that subject, so we're super excited to have you here. In fact, you've been talking about how conflict in the Middle East could impact crypto. Why is that something that we should be paying attention to right now?
Okay, perfect. I need to give you like a little bit of context so we actually can understand the whole topic. First of all, what we have to know that our international organizations or even countries sanction other countries. What is a sanction? Is kind of the middle ground between a diplomat act and a war act. Is I'm not sending you my ambassador to tell you, hey, you are misbehaving. I'm not sending you a rocket. I'm sending you a sanction. And sanctions, they have lots of objectives, but the main objective is constrain your financial system. So Iran has been target of sanctions since 2006. At first, UN sanctions before because of their nuclear weapons development program, and also has been on the FATF blacklist since 2009. So what it means that Iran cannot actually enter, the banking system. For them, it's really difficult to enter the banking system. If you want to send money to Iran, it's not going to be easy. So Iran, at least, there are accusations really interesting because just last week, FATF bring up a new guidance related to sanction evasions, talking about the use of crypto to evade these bank controls. So imagine this. If I cannot send money to Iran, or if Iran cannot send me money through the banking system, crypto is a way to send that money internationally super fast. So there is a really close connection between crypto and in the illicit part of crypto, which is actually really small, sanction evasion. So I have sent the team a few photos. I don't know if they can show the photo number 1.
Let's see, I think they're bringing it up here for you. There we go.
Okay, perfect. So what we are looking there, Hank, is all the crypto money related to different crimes. This is a report by Chainalysis. By Chainalysis, Chainalysis is a blockchain intelligence company. So if you can see the different bars, you are going to see that both sanction jurisdiction and sanction entity is the main chunk of the illicit use of crypto. Last year, in 2024, it was the 38% of the whole use of crypto. So the usage of crypto by countries that are sanctioned is really big. It's more than scams, more than trafficking, more than anything else. So that's why there is a really close connection between Iran, what's going on the Middle East, and the crypto usage.
Got it. Interesting. So When a country like Iran is sanctioned or blocked in this way, does crypto then kind of become a tool for them to get around those sanctions?
Yeah, o sea, that's the whole point that I'm trying to make. So I always say, and this I can say it as a criminal investigator because I have been in investigations for lots and lots and lots of time and lots of cases. So crypto is not a good technology to commit crimes, but crypto being so international and so fast, it's a more logic use if you want to evade sanctions. So if you are a sanctioned country such as Iran, North Korea, Myanmar, in cases that FATF blacklist countries, or other countries or other entities, crypto is actually a really smart way to go around these sanctions. So whenever you find a sanctioned country, you are probably going to find a really close connection between the crypto usage in the country and the quantity of sanctions that they have.
Interesting. So sanctions like this in Iran, in a way, then could in fact promote further crypto adoption because they allow countries like Iran and North Korea that are both, I believe, fully covered by these FATF sanctions. It could allow both of them to want to adopt crypto more, or add crypto more to their processes more because they don't have to worry about bank sanctions. Is that right?
Yeah, more or less. At first, you have to understand why they are being sanctioned. Okay, so when there is a sanction related to terrorism and when there is a sanction related to proliferation of weapons of mass destruction, the the situation is really, really, really different. Because in cases of proliferation, it's really important from where the money comes and also to where the money actually goes. And what does this mean? That, for example, in cases such as the Iran case, imagine that you as Iran, maybe you don't have that much exports because you cannot sell your oil to everyone. So you can only sell your oil to a really small list of countries. So you need money to develop the weapons that are really, 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 really expensive. So Iran, for example, is being accused by the US of being mining Bitcoin. So they get really clean Bitcoin, new Bitcoin that they can go to an OTC desk without that many controls, convert that BTC in USD or USDT or another type of coin, and then with that purchase the technology, the goods they need, etc., to develop their weapons program. And that is something that you are going to find like in every country that is being targeted of being developing weapons of mass destruction, like is generally nuclear weapons without the proper controls. So
Got it. Do you
again,
think there's a
in cases of
Go ahead.
no, that in cases of proliferation of weapons of mass destruction, it's really important where can it go from where the money comes and where it goes, which is really different than in the cases of money laundering that you only care where the money is originated, or in the cases of terrorism that is more important where the money goes, not where it comes. Proliferation has
Got it.
everything. It's really, really different.
Interesting. Do you think there's a chance that more countries could be added to this FATF sanction list in the near future? Because right now it's Iran and North Korea are the two big ones, right?
Yeah, in the blacklist, only Iran, North Korea, and Myanmar. I don't see a possibility of any other country entering the blacklist. I think that there are more possibilities than Myanmar exiting the blacklist than a new country entering. Imagine that in this case, we are talking about two countries. In case of Iran, that they are like being targeted because they are developing nuclear weapons without the permissions of of the whole consort of countries. In cases of North Korea, it's exactly the same, and there is imagine that also all of these countries are also developing missiles and ballistic missiles that can go like to other countries and to other continents. So the threat for the international consort of countries is growing each year more. For example, this year we have a really, 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 really big hack, no? The Bybit hack. Supposedly, it was
Yeah.
Lazarus Group. And Lazarus Group is the, or also called APT 38 or Advanced Persistent Threat 38, is the supposedly cyber crime group from the North Korean army, which is also divided into two, and Dariel and Blue Norov, that made different things, but all in all, they are attacking crypto exchanges to take money to build nuclear weapons that the consort of countries don't want them to actually do it. So imagine, also, we are speaking about some countries, some jurisdictions that at least from some part of the world are being seen as criminal. And so FATF, it's only comprised by countries, like they are full members, and I don't see those countries like giving a different opinion related to the blacklist. So no new countries in the blacklist. I think that maybe Myanmar can exit the blacklist. I don't see both Iran or North Korea exiting it at least in the near time, in the near future.
Understood. So, do crypto companies themselves need to do anything to show that they're complying with these sanctions? Are they not allowed to work with countries that are sanctioned by the FATF, or how does that operate?
Okay, amazing question. At first, also, what we have to understand is that in blockchain, there are no countries operating, which means that there are no police in blockchain. So the first line of defense, or at least the eyes of probably the countries, are the exchanges, or the crypto exchanges. So nowadays, we are seeing that lots and lots of countries already have crypto regulations, and all those crypto regulations are related to anti-money laundering, a counter financing of terror, and counter financing of weapons proliferation. When you have those obligations, what you need to do is make a sanction screening check. So any new customer, you need to see if there is in any list that says, "Hey, X person is in a terrorist list," for example. But also in crypto, we have like new technology, much more technology, and we have what we call in the industry the KYT tools, or the know your transactions tools, kind of TRM, elliptic, Chainalysis, etc., that can show us if any address on the blockchain actually has a tag. Like, I don't know, this is a terrorist address. I don't know of which terrorist, but I know that it's related to terrorism. So you are always doing like a sanction screening in the exchange. If we can go just a second to the photograph number 2, I can show
Okay, yeah,
you
bring that
something
up.
that is going to make much more sense.
Okay, great. Yeah, team's bringing it up right now. Let's take a peek at that here. There we go.
Okay, perfect. What you are seeing there, Hank, is you like a few minutes ago that 38% of all the crypto crime is related to sanction evasion, no? Also, like
Yeah.
prior to this, we have to understand that this is not, there is not that much money related to crime in crypto. Only 0.18% of the whole amount transacted in 2024 is related to crime. Of that amount, only 38% is related to sanction evasion, which is kind of $15 billion, more or less. What we are seeing there is that before, when we were talking about sanction evasion in crypto, which is something that we are seeing on these tools that I'm telling you, in these KYT tools, was related to sanction entities. I know a crypto exchange by itself can be sanctioned. And now there is a big, big change, and now we have a much bigger flow related to sanctions jurisdictions, such as Iran. So whenever you're in a crypto exchange, you're always seeing this. You're always seeing that if your customers are receiving or sending money to a sanction jurisdiction, a sanction entity, and whenever you see this, you have to put in place to block that or try to that to not to happen, because having a sanction movement in your exchange is something like it's really 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 bad for you as a company.
Interesting. So I guess my question is, how are people in these sanctioned countries actually using crypto to move money? Like, what does that process look like in real terms?
Okay, imagine that when you're in some of those countries, you are out of of the concert of the FATF countries. So maybe your anti-money laundering laws aren't that strict that as in other countries. So there are exchanges where you can make your own accounts probably without that many information. And if you want to move money abroad, you're going to need to find those exchanges that are abroad that haven't that have not any KYC, or they don't have strict controls, so you can use you know that you are going to evade those controls, because for example having a KYT tool is something really really expensive. So maybe you try to find a brand new exchange to move money, but on and on, the user perspective is the same that in any other place. What they are going to have is much more problems when they want to transact. And in those cases, they will need to know where to transact so they don't have their money, caught.
Now, let me ask you, in your experience, have you ever noticed like any patterns that we can see during times of war or tension like we've been experiencing recently, for instance, where maybe there's like a sudden spike in crypto leaving a country like Iran? Like, is that something you're able to notice on the charts?
Yeah, if we can go to photos 3 at first and then jump to the 4 and 5. But first, also, I need to see the third one.
Okay, I think we're getting photo 3 up for you right now. Let's take a peek
No,
here.
that one.
Perfect.
That's the relation between the searches in Google of Iran, Israel, and the outflows of crypto from Iran to other jurisdictions. See the spikes and how they correlate. Whenever people is looking much more to the words Iran, Israel in the same sentence, so you can imagine that when that actually happens, is because there is something in the Middle East, probably like war related. There are sudden spikes out of Iran. If we go to the following photo,
We got the next one, guys?
what
There we go.
yeah, what we are going to see there are some successes, some events, some conflict events, and how when there is a spike or an attack, etc., we also have spikes in the crypto movement. So from this, we can get lots and lots and lots of hypotheses. No, one can be, hey, people is afraid of them being attacked, so they want to take their money out because they also want to go out. Also, this can be that um, there is an afraid that the banking system is going to get like grabbed by the state to continue the funding of weapons. So let's take the money out. Also, maybe there are payments for weapons that go abroad, but everything, as they have to move it abroad, is made in crypto. So there's actually a really, really, really big correlation between crypto and times of conflict in Middle East. Again, just last week, the FATF published their new guidance on sanction evasion, and they put only 5 topics as the biggest topics or the more complex topics about this. And one of the topics, of course, was the relationship between crypto and sanction evasion and what's actually happening nowadays in Middle East. And also, what you have to think if we go to photo 4 or to photo 5 is just the same. We have to remember that last year was the year of the Hamas attack, but also it was the year when Hezbollah was not struck down, but really shrink because of Israel attacks. Also, Hamas isn't at its peak moment right now. It's the contrary. And also, the regime in Syria of al-Assad has fallen. All of those were considered proxies from Iran, proxies that were funded by Iran. So we are always going to find a perfect correlation between those moments and the movement of crypto.
Interesting. And so when you're looking at exchanges or other crypto platforms, are there any like warning signs that a transaction might in fact be linked to a risky place like in Iran or in North Korea?
Yeah, well, in the cases that you have a gateway tool, in the exchange, and you have everything integrated, etc., you are going to see what's the qualification of every transaction entering or going out of the exchange. So sometimes you can locate perfectly, hey, you have a customer that has just received money from a sanctioned entity. That again, maybe I don't know that if that address belongs to X person, but I can know that it has already been tagged as coming from Iran. So all those correlationships, you actually can see it in the blockchain. The blockchain is super public. The only problem with blockchain is knowing how to read it. But when you have those kind of softwares and technologies, really easy. Maybe it's way more difficult when the hubs is the transaction distance between addresses, but when you're receiving from a clean address and maybe 1, 2, 3, 4, 5 hops away, we can see that actually that money came from a sanctioned address, no, because it was in a sanctioned jurisdiction. In this case of your question, I don't know, from Iran. So actually making those quant prevention programs work and be effective is super difficult. But well, if you know how to do it, if you have the tech, if you take the proper measures, etc., you are going to be able to prevent this and to see this. Again, blockchain is super public.
Right. I want to kind of scale back a little bit. In terms of like conflicts like we're experiencing in the Middle East right now, How do you feel that affects crypto companies both in the US and Europe? Is this something that hits globally, or is it mainly contained to the Middle East?
Oof, oof. This is a question that I think has lots of different answers, no? But when it was the attack from Hamas in Gaza here, there were plenty of accusations that there was a lot of crypto use for this, and that actually hit the crypto price, at least from 1 week, 2 weeks, because crypto prices come and go sometimes. But at first, also, we have to think if that as a situation is going to affect crypto prices. But the other thing that we need to think is when we are talking about finance, there is a concept which is called flight to quality. The flight to quality means, okay, you're investing in different things. Maybe there is a new time, a new, there are things happening that make the markets constrained. When that happens, you usually sell your more risky position and make a flight to quality for positions, for assets that are considered like more stable, such as gold, for example. In the case of this war, what we have to think is that lots and lots of the productions of oil in the world actually came from Middle East, and in the Persian Gulf, we are going to find around 21% of the oil production like worldwide. Okay, and that production is going through the Hormuz Strait, which is kind of a strait, really really narrow, where we have Iran in the north and different countries in the south. But in the most like narrowest part, we only have Iran and Oman. And what that makes is that if Iran actually blocks the strait, oil is going to go up. Actually, oil has been going up this last month after all the events that we are seeing in Middle East. So that can make that the really big investors, they have to see chaos. Maybe the price of oil is going to get super pumped. Well, maybe like this is a financial stance. I want to go to other kind of asset that actually is going to get up or is more stable, etc. Nevertheless, what we are seeing is that Bitcoin price is really, really helping this. So on Sunday, I think it went to 99,000, but nowadays we are again in 105. Maybe, and this is the next question, maybe the flight to quality nowadays is the flight to Bitcoin. There are countries having their strategic reserves in Bitcoin, well, such as the US. Every day we are hearing about way more companies having Bitcoin treasuries. So maybe this conflict, what is actually showing us is that the flight to quality nowadays is the flight to Bitcoin. What at least is a really important question to make us. But again, oil prices are going to change if the conflict continues. We don't understand actually where we stand, because last night there was a ceasefire, but things are still happening, so it isn't really clear. If that makes the oil go up, this is going to create a huge inflation, because every logistics needs oil to move. So things are going to go up, and that can disrupt crypto price or show us that nowadays the flight to quality is the flight to Bitcoin.
Do you feel like the events of this past weekend and how we saw the crypto market specifically respond to those events is signaling that we're entering this new era where crypto and war are more connected than most people realize? I mean, it would seem like after we heard about those bombs dropping this weekend, we saw crypto kind of tank a little bit, and then the ceasefire happens, and all of a sudden we're back up. So do you feel like crypto and war are now a lot more intertwined than they were in the past?
Yeah, well, no doubt about that. And crypto world have been really, really close for a few years now. For example, when the Russian-Ukraine war started, Ukraine started gathering money from different donors. Lots and lots of those donors were actually sending money by blockchain using a mixer in the middle. So people also they weren't targeted as donors to Ukraine, and maybe they were citizens from Russia. So, and Ukraine was getting money and lots of money by crypto. So there is always also in the last wars, we are always going to find a relationship between crypto and war, and also a relationship between the price of crypto and war. Crypto nowadays is another currency, such as, well, not all of the cryptos, but for example, Bitcoin is another currency such as dollar, yen, etc. And every currency it's hit, and the prices and the values actually change in war scenarios.
So Alfonso, let me ask you this. As someone who's got a lot of knowledge in compliance, when it comes to building new crypto products, which you've done before, what does it mean to build them responsibly during times like this?
Okay, that's a really great question, a really difficult one. But when you work in crypto, when you work in most of industries, you are always relating and going around with the concept of risk. Everything we do is a risk. Life is governed by risk. Imagine that, I don't know, Hank, you have a company that makes buildings. So maybe if you make a really tall building, you have a risk that one of your workers fall and dies. Also, risks are everywhere. And when we are working with crypto, we are working also with a currency that can be sent instantly from one point of the world to another point of the world. Now, in this moment, I could send you some bitcoins, or you could send me all of yours, and then I will send them to you back. But so we are creating technology, and we are creating technology that actually has value and can be converted to fiat. So whenever we made these kind of things, we have the possibility that those things are used in the wrong way. For example, Tether, the creators of USDT, one of the biggest crypto companies in the world. If you look at this, you are going to find it. It's really, really easy to look it in Google. Has been working with Homeland Security, FBI, and some other agencies, burning crypto that was held by terrorist groups. So there is when you build something in crypto, you have always the risk of that crypto being misused, but also as a company, you have not only the responsibility of doing things in the best way you can, but also you have the possibility of taking actions to prevent or to correct that risk, such as the case that I just told you about Tether burning USDT with Homeland Security related to Hezbollah.
Got it. So, Alfonso, I know we got to let you go here in a sec, but I have one last question for you. As someone who's got an incredible knowledge of excuse me, the products that are being built, the responsibility that is involved there, and the risk that's inherently involved. If you had one message for governments and a separate message for crypto builders going forward, what would they be?
Okay, two messages then. For governments,
Yeah.
that crypto isn't the same as crime. There is a huge idea that crypto and crime are the same. As a criminal investigator, as a compliance professional, as a student of conflicts and crimes and the understanding of them, I can tell you that if you look at the percentages of crypto being misused and the fiat being misused, you are going to understand that that is incorrect and that we don't need and we shouldn't create this kind of course related to crypto. Crypto and crime are not the same. So there cannot be so much difference. And to creators to be responsible, because I think that people and society always have, an expectation that people around them are doing things in a good way, etc. And also there is an expectation that the crypto industry, as one, makes this big leap to be a super mature industry, responsible to their users, etc. So it's really important for the people that is building crypto to build it responsibly.
I love it. And we certainly appreciate your expertise and knowledge of this whole arena, Alfonso. If our audience is out there and they say, hey, listen, we really like what Alfonso has to say and we want to stay up to date on the latest compliance in this space, are there places we can send them, a LinkedIn, an X, a website, something else where they can get more of your expertise and insight?
Okay. I always post things in LinkedIn, Alfonso Martínez, such as my name. I actually started a few months ago with a series with a Muppet that is like staging the things that I'm telling, etc. The Muppet, it's called Box. So every week I post a new series explaining something new and always related to this Muppet. So you are going to see a Muppet doing some OSINT, a Muppet putting someone in jail, a Muppet in a FATF plenary, and the idea is to give like useful and simple content for people that is actually interested in this.
I love that. Interesting and informative content. Such a good idea. So everyone make sure to check that out to be sure of all the latest developments, and you'll get them straight from the horse's mouth. Alfonso, thank you so much for joining us in the show today. You are certainly welcome back anytime, and we hope you will keep us up to date with any new compliance news that comes out, because we want to be in the know. We want to keep our audience in it as well. So thank you so much for joining us today. It's been a real treat.
No, thank you guys for inviting me. I have a blast. Bye-bye.
Pleasure was all ours. Thanks, Alfonso. We'll catch you really soon, bud. And we'll catch all of you at home right back when we return for a little bullish, bearish, or BS. Let's wrap up today and see how things are looking for Bitcoin. Stay tuned. All right, it's 9:52 a.m. on this fine Tuesday. Let's take another peek at how the markets are treating us this morning. Please be good. And they're looking pretty good. Right now, Bitcoin's still hovering right beneath that 106K mark. We've increased a little bit since earlier this morning, but things are holding pretty steady in that 105, 106 range. Ethereum still hovering beneath that $2,500 mark. That seems to be the level of support and resistance as of late. So hopefully we'll be breaking through that soon. XRP sitting at about 220 a coin. Cardano at nearly 59 cents a pop. And what do we have here? Dogecoin just beneath 17 cents right now at about 16.5. In TradFi, we have Dow Jones having a nice day, up about 500 points. Same to be said for the NASDAQ, up almost 300 this morning. And the S&P also joining the party, up a little over 1%. MicroStrategy, as we always say, it goes where Bitcoin goes. And with Bitcoin go up, so does MicroStrategy as well. They are up almost 14 bucks on the day. Michael Saylor probably feeling pretty good right now, but I think he's always feeling pretty good. Next, we have Tesla. They're down about $5 today, but they had a huge upswing yesterday, so I'm sure everyone in their camp is doing just fine. Coinbase having a monster day, up over 10%. Brian Armstrong is doing his happy dance. Nvidia is up over 2% on the day, and GameStop still hovering around $23. Let's return to camera one and wrap up today's show with a little bullish, bearish, or BS. Let's go. All right, friends, it's that time of the show where we go over our top stories of the day and decide whether or not things are looking bullish, bearish, or otherwise for our beloved BTC. First up, in a surprise ceasefire between Israel and Iran, it sent Bitcoin flying from under 99K to over 106K briefly, while rate cut optimism and falling oil prices have given markets more room to breathe. My diagnosis, I am strictly bullish on this. I mean, geopolitical stability plus macro tailwinds equals a perfect excuse for institutional money to keep buying that dip, baby. The rapid recovery above 100K shows us that strong market conviction and limited downside appetite is still very much in play. Ceasefire plus rate cut chatter equals green candles for everybody. We're bullish. Next up, we have some TradFi execs are fearing that Bitcoin won't survive once Trump's gone, but hedge fund exposure to crypto is actually increasing. And one CEO just announced plans to scale from 4,000 to 100,000 BTC. I mean, my diagnosis on this, gang, is bullish. I mean, even the skeptics are stacking. There, of course, is going to be some fear that exists in the market, but the actual flow of capital is heading straight into BTC, baby, and that's what matters for price action moving forward. TradFi often talks trash, but they tend to buy up the dip anyway. So I'm bullish. Too bullish to start. Good start. Next up, we have Bitcoin dominance has surged past 66%, which means it's crushing altcoins and reminding everyone who the real king of the block is. Analysts think a brief altcoin season could follow. Maybe. My diagnosis is bullish on this too. I mean, as long as dominance stays high, Bitcoin's price enjoys the spotlight and market confidence. Altcoins may pop a little later, but right now the money is glued to Orange Coin. Altcoins are coping, but Bitcoin, it's coasting, baby. 3 bullish to start. Can we get a clean sweep today? Next up, we have Anthony Pompliano just raised $750 million to build a Bitcoin treasury, aiming for over $1 billion in BTC purchases through his new firm, ProCap Financial. In fact, they just made their first Bitcoin purchase right at the top of the show for over 3,700 Bitcoin, so they're well on their way. I mean, this is super bullish, gang. This is $1 billion in potential buy pressure underway. We already saw some of it this morning, and unlike tweets, this one comes with a wire transfer. So supply shrinks, conviction continues to grow, which means price go up. Another mega buying spree is on the way and already started, which is, of course, very bullish for the orange coin. So I'm bullish on that. 4 bullish, 0 bearish, 0 BS. Let's see if we can do it. Right now, today, Max Keiser said once again that Japanese bonds crashing will cause Bitcoin to skyrocket to 800K. Some people call it a prophecy, others call it copium. My diagnosis on this, it's a fun headline, but speculative doom scenarios don't necessarily move price. Capital allocation does. So I'm calling BS on this, okay? It's entertaining, but it's not actionable. So today's score, we have 4 bullish, 0 bearish, and 1 BS, which means today's diagnosis is very bullish, baby. Ceasefire, optimism, institutional inflows, treasury buy, there we go. And altcoin dominance all point to one thing. Bitcoin still runs this game, baby. Thanks so much for joining us on today's episode of the Blockchain Report. Make sure to like, follow, and subscribe to RoxomTV and me at RoxomTV everywhere in the world. We're on like all the platforms, TikTok, YouTube. We might even be on Yelp. I don't know. Check it out. As always, thanks for watching and tune in Wednesday for more crypto chaos and Bitcoin dominance. We'll see you then. Thanks for tuning in. Woo!